everyone. Welcome. My name is Rachel Foy. I own Hillman Homes here in West Newton. We are a real estate firm who helps buyers, sellers, investors, and renters. And I'm really happy to be doing this podcast. And I'm really happy that my friend James Salamini is here from Guaranteed Rate. Getting back into, so we talked a little bit about the team, and I would just add, I'm similar. Obviously, we're the same team. I come at it from another perspective because a lot of times I'm 95% referrals. Somebody's referring themselves to me to buy a place, and I'm helping explain to them same thing, why a team is so important. So I explain to them the first thing they've got to do is get pre-approved, and that's where you come in. And then I talk about how when they're going to need a real estate attorney, at what point they're going to need to actually think about legalese, when they're going to have to put deposit money down, and how to get that deposit money too. We could talk a little bit about that as well. But, you know, the team is so important. I want to go back to the pre-approval process because one thing that I think is so special about you is that we're back in the day, right? It was, let's get pre-qualified. You're going to call a guy and they're going to say, here's how much money you make and here's your credit. And I don't even know if they pull credit, right? They'd say, how much money do you make and do you have a job? And tell me what you want to know. Okay, I think you could qualify for this, right? And then we have the pre-approval. But you go one step further, and I want you to talk a little bit about, for these folks out here, tell us a little bit about the power bid.
Yes, the power bid has been the, pardon the pun, most powerful.
The power bid is powerful.
It's been something that has been super successful for my clients, but also for us as professionals. So it's basically one step further. So if you go back to what you just initially said, the pre-qualification versus pre-approval. Pre-qualification is a conversation. Pre-approval is a verification, right? So you could say, hey, James, I make $1 million a year. I can put down 50% and, I have an 800 credit score. How much would I be approved for? I can quickly do some calculations, say, here's your pre-qualification based on what you just told me. But that doesn't mean anything because I haven't verified anything. One step above that is a pre-approval where I verify everything. I'm pulling a credit report. I'm getting income documentation. I'm getting asset documentation. I'm actually running it through my underwriting system, get an approval because sometimes it doesn't like it, doesn't approve it for whatever reason. So I actually have to get that pre-approval. That was our new normal for a very long time. And now it's one step above that because it's been so crazy competitive. You're competing with cash offers. You're competing with, significantly higher offers, but we're doing what's called a power bid. Power bid is a fully underwritten pre-approval. Now we call it's a pre-commitment. Power bid approval is a pre-commitment. It's actually getting looked at by the decision maker, which is the underwriter. We're doing the checks behind the scenes, things like IRS transcripts. We're doing verifications of employment. We're getting, of the 4 pieces of a total mortgage approval, you have the property, which is appraisal, title work, and insurance. We don't know that one yet. But the other 3, income, credit, assets. All that is being approved by not only me, going above me to the underwriter. The underwriter is actually issuing a pre-commitment letter. We call it a power bid approval. That power bid approval is saying you can compete with cash, we can close in 10 days, and it's already approved. You don't have to worry about it. Even if you have a mortgage commitment, we can hurry up and get an appraisal done as soon as possible. We can get the other stuff done within a couple of days. If we need to, we can get appraisals back in a couple of days, and we can fully remove that contingency if you keep it. But this is allowing my buyers to remove the mortgage contingency, compete with cash, and close significantly faster. So it's just what you're trying to sell to a seller is certainty. When you're making an offer, and as a seller's agent, when I'm giving you an offer and say these terms look great, how do I know this is going to actually happen and going to close? Certainty is what you're selling, and that's what we can offer with the power bid.
Absolutely. And I would give 2 examples how this has worked for me as a realtor. On the selling side, for example, I work on the listing side, of course, as well. I just had a listing and 5 offers came in. 3 of those are cash. 2 of them have an offer, right? So we know it becomes a little bit like a game. I take the 5 offers. Who has a home inspection, right? That's an out, right? The people with the home inspection, unfortunately, and we'll talk about this later on, but, the home inspection is a potential out. And then if we're left with 3 where they're going right to purchase and sale, now let's look at their financing. And I'm shocked that people are just putting in a regular pre-approval. Either they don't know about you or know about this pre-commitment, but a pre-approval means nothing other than, yes, they got verified, but there's so many things behind the scenes that can go wrong. So that I have that versus 2 cash offers versus when I'm on the other side If I'm representing buyers and I say, here's the power bid, I can basically say, here's a commitment. This is as good as cash, especially if they're waiving their appraisal contingency. And that means that they're willing to make up that gap between what the bank appraises it for versus what it's worth, if they have enough ability to do that. Or I can put a contingency based on how much of that gap they're willing to make. But that puts them in line with a cash offer. The other thing that's really important is we always talk about price when we talk about making an offer. Terms are really important too. So I have a lot of situations where I see the seller needing time to find a place to buy, but they want to close quickly and rent the place back. Now with a power bid, from my understanding from you, and correct me if I'm wrong, but now they can close possibly in 10 days or a couple weeks. That's as good as cash. So if everything's all set up and now the sellers can stay, they close on the property, and now they have time to go find something with cash in hand, that makes all the difference.
Absolutely, yeah, because as you know, making an offer with a home sale contingency, whether you have a purchase and sale in hand or not, you still have a home sale contingency. So you're relying on other people, the buyer and their lender's ability to perform and actually close that loan and for you to get the cash. So if we can close, do a rent back situation where if you're buying as a primary residence, you just have to occupy the property within 60 days. So you have a built-in at least 60 days for them to be able to rent back from the new buyers, not have to move out yet, to be able to go out and shop with now this cash in hand where they don't have to worry about a home sale contingency.
Right. And the other thing I wanted to talk about was credit scores, going back to that. I think a lot of people get nervous about doing a pre-approval because there's some mysterious quote out there that every time you pull your credit's going into the sinkhole, right? And I think, and again, correct me if I'm wrong, that one thing is once they're set up with a pre-approval, that to get pre-approved, you can do a soft credit pull. Is that correct?
Yeah, so our credit pulls actually changed. Now we do 100% soft pulls up front.
Okay.
And when you get an offer accepted, we upgrade that to the hard pull. So you don't have to worry about the hard pull. There's two things to worry about. Number one, it dinging your credit score a few points. If you're on the margin, if you're trying to be above a 640 and you're right there and it dings it, that could take away some programs that you could be eligible for. You could be an 850 credit score, it doesn't matter, but people don't want the dings on the credit. That's number one. Number two, when you have a hard pull in your credit, now that information, which I think should be illegal, but the credit bureaus sell that information as trigger leads to other lenders. Now all of a sudden you're getting called from every lender about mortgage applications that you just want to get a pre-approval. And now all of a sudden you're fielding phone calls all day long. It's the most annoying thing. So the soft pull avoids that. So the soft pull allows us to get all the information we need, actually be able to run it through underwriting, make that credit decision. So then when you go find the property, you can, you get accepted, then we upgrade to the hard pull. Or and the credit's good for 120 days. If you don't find a place within 120 days, we can always do another soft pull and you're good for another 120 days and you're good to go.
So just to be clear for our friends out here, the soft pull won't affect the credit score.
Correct, it will not.
Versus the hard credit score. I know when a hard pull, when we look at our credit scores, they don't like to see more than 3 within every 2 years or something like that? Or is it, I'm not sure exactly.
Yeah, it's a sliding scale. They usually track within the last 6 months.
Last 6 months.
Yeah.
So really having the soft pull is so important. And it's an important question for when you're interviewing lenders, because again, that's not in every lender situation. That is specific to you and Guaranteed Rate.
Right,
correct?
Exactly, yeah. A lot of other places are still doing the hard pulls. We just went to the soft pull because it just makes the process easier.
Absolutely. Talking about the power bid, one more way, why wouldn't somebody get the power bid?
There's no downside. It's everyone. That's the main question I get is why wouldn't we do this? It doesn't cost any more money. It only takes 24 hours, depending on if we're going through underwriting. So things could come up where you have to explain things or get more documentation. This is the underwriting. You're getting the bulk of the work done up front. So for the most part, if it's a clean deal, we can get it done same day. And now you have that elevated level for the power bid and you're good to go. So there's no downside. Again, it doesn't cost any money. There's no additional commitment, although selfishly on my side of things, if I'm giving you a fully underwritten pre-approval or power bid approval, and you can say you can close in 10 days, you're not going to go to the bank down the street and be able to, shop interest rates and try to close with them. What's going to happen is you're going to stick with us because we're able to get it done faster and we're able to get it done with no stress, no headaches.
Plus, you're not struggling, the day that you fall in love with a property to go find the papers to figure out how to get this pre-commitment anyway, or your commitment letter. It's already all in the system, so they're ready to go.
Right, exactly.
So you heard it here. Go get a power bid.
Power bid.